Good morning, traders. Chris Bus here with Traders Profit Compass with your morning look at markets for Friday, October 15th. It is 6:30 as I'm starting the video. And as always, run your player at 1.25x. All right, let's dive in right away. We've got equities in the green, pretty much about 0.35% across the board. Oil's up 0.85% and sitting on $82 mark. Copper's up 1.5%, nat gas 1%, and gold and silver down a little bit, like 0.5%, something like that. Over on the macro side today, kind of a busy day. We've got retail sales, which will be closely watched. Empire State Manufacturing Index. We've got business inventories, and then we've got the University of Michigan consumer sentiment at 10 o'clock, and that's where you would see, inflation, that kind of thing, start being reflected in consumer sentiment. Rising prices, stuff like that, all kind of gets in the psyche of consumers, and then it tends to show up in the sentiment index. So we'll wait and see about that. And also, as a reminder, today is October options expiration. Please, we'll kind of make it a policy every Friday. Look at your holdings. If you're a guy or a gal that regularly trades weekly options, you'll have to stay on top of that. Here we've got a monthly and a weekly option expiration day. So just make sure you review your holdings and you don't get any rude surprises tomorrow morning when you are assigned a bunch of shares, stuff like that. So it's always good to take a spin through the portfolio on a Friday to make sure nothing's fallen through the cracks. Earnings this morning, we've got a bunch of banks. We've got Goldman, Schwab, Truist, PNC Financial, and we got a couple of truckers, JB Hunt and Prologis. I believe that's a trucking line. So that should give us some good read on the transports. Yesterday with the banks, I think Bank of America did really well. Fargo had a negative reaction, so we'll see how. I expect all the names that I just listed to have pretty nice reports. So we'll have to see if that lifts financials. All right, let's start with the dollar and spin through our charts. We've had some developments over the last couple of days. Here we were tracking the USD, where it had spent a couple of weeks testing this 94.50 area, and Wednesday and yesterday kind of fell away and out of the channel. So now we're down, it looks like we've got a rejection there down below, tagging the 20. And I think just from a technical standpoint, we would probably come down here to the 93.50 area, and you can see the rising 50 EMA is coming in right to that area. And so just from a technical basis, we've had a breakout and then coming back for a potential back test at support, and as the 50 EMA comes in. So that'll be a good support level to watch, because the dollar kind of rolls into everything. So a weaker dollar, a downtrending dollar, will be a tailwind for commodities and gold, all the dollar sensitive stuff. A falling dollar will be good for multinationals because they will be able to exchange whatever international purchases are made, when those come back to the dollar, you'll get more dollars in a falling dollar environment than you would in a rising dollar environment. So falling dollar will be good for multinationals. It's also good for emerging market indexes. Okay, and also if you're new here, welcome to the channel. I really appreciate your time. If you jump over in the show notes, there's a place, a link that'll take you to the website, to the registration page for all the content. Just drop in your email, takes 10 seconds, and then you'll get all my content right in your email box, and you'll also get a link to our trading room. We'd be glad to have you. And of course, subscribe to the YouTube channel and hit that alarm bell. You'll be notified of new videos. And longtime subscribers, I really appreciate you being here. I hope your trading's going well. So here's some extra info on the registration process for those joining for the first time. That'll help you through the process. Okay, yields. We had the breakout. We got up to the low 16s. And we've had two really nice auctions this week on the 10-year and the 30-year. And that has pulled yields in back towards this 1.5%. And I think that has helped the bubble names, tech in general, I think have gotten at least a little lift out of the falling rate over the last 2 or 3 days. So now we'll have a little moment of truth at 1.5. So keep an eye on that. I expect that to hold. If it doesn't, you're going to see, tech extend, because it'll, the falling rates will be a benefit to the ARC names, the bubble names, tech in general. And then that would be a headwind for banks and financials up here. So anyways, I expect that to hold. But if we get down in the low 1.4s, that's not going to bode so well for our reopening trade. So moving on, whenever you've got falling rates, you're going to have a rising TLT. And you can see we had the consolidation, breakdown, and now we've got that back test, which if you've been trading or with me for any period of time, you'll know that's a very common move. Breakdown, back test, and then down, that ABC move, A, B, C. So with price heading into like a triple zone of resistance, level 1 is you're right here at the 200. You've got the falling 50, and you've got lateral resistance. So for that to break out back into that range above 146.50, that's going to take some doing. So this is the second bite at the apple if you wanted to do a TLT short. This was the, on the back test, you would get short right here against 146.50, then put your stop just above, like at 147, and see if you don't get that move back down. That's what I would expect would happen. But if it doesn't and it pops above, then you got to get out of the position, because remember, moves back into a prior trading range, the target becomes the opposite side of the box. So if we broke into the 147s, you'd have to almost plan on a move to 152. So really kind of a critical spot on rates and TLT. They've really slammed the VIX. We were up in this 20 to 25 range, and now they slammed it back down this week, down under 20 with support at 18, and yesterday, so then now they've taken it down below 18. So that's going to be bullish for stocks. That's, our reversal in price, if you will. Price is going up, VIX coming in, and so now we are back in a range where I would expect the VIX to pull in to the bottom of the prior range, which is back down here around 1575, something like that, right in here, and then it'll be at support again. So I think the VIX is helping us with a signal, and at least a confirmation that some of that embedded fear has been taken out of the market as we've turned around. Now, I wanted to show you, I haven't showed you the oscillators recently because they haven't shown anything, but I did want to show you the NYMO this morning, which is the NYSE oscillator. We had the trip down to minus 60 or close to it, and then we had a period of a lot of stagnation here in the middle, but then yesterday we got a big move up towards 47, 48. So that's something we're going to need to watch into next week, because if they keep going on this trajectory, we're going to get overcooked, overbought, and then we'd have to look at peeling back some of our longs in anticipation of the reversal that is pretty consistent once you get up into the 60 or higher range on the oscillator. So moving on to the indexes, here was our move down. We had a rally, which they faded, came into, I can just eyeball it and almost tell you that's a 50% fib. Here's your first leg. Here's a 50% pullback. And then there's your next leg higher. So for today, we've all but filled this overhead gap. Here's the gap from yesterday morning. Here's the 50 on the daily chart. So today, I think your pivot is more or less 442.75, and you can make that. 443. It's not going to make a difference. We're green in the pre-market, and if that holds, what's going to happen is you'll have a little gap below when we open, and then I wouldn't be surprised with a little small gap that they would just come back, touch yesterday's close the gap, and then move higher. One thing you want to do on your charts is make sure you put in this gap from yesterday morning. That's going to be important because notice where the 50 comes in. It's right there. It's going to be right at the gap support line. So what we've been talking about is now that price is above the 50, we can be a lot more confident in our bullish positioning. And then a move back down below the 50 would kind of be a risk-off move if we were to, come back and lose the 50 and then start heading down again. So really important spot right here at 439, 438, where both the gap and the 50 EMA comes in line. Here's a 30-minute chart. You can just see those levels a lot more clearly. Here's the gap below, and here's the overhead resistance levels. Moving on to the Qs. Not as far along as SPY. Why? Because where SPY is or has basically filled its overhead gap, Qs are still pretty far behind. It's got this one to fill and this one to fill before it can break back above into this range. So it's lagging a little bit. Here's the gap from yesterday morning, and here's the gap from last week, or even the week before that. And I think you can use the bottom of the gap here at 3. Well, let's call it 366. That's going to be fine. Just use 366 as your pivot. As long as it stays above, I think you can be bullish and look for this gap fill, and then another gap fill up to 374. But if it comes back down and rolls below 364 back into this gap from yesterday and below the downtrend and below the 50, then that's going to look like a fake breakout. And here's just a little bit more detail for you on the 30-minute chart. You can see the resolution of these gaps. And if you're actively trading, of course, you're probably using an even shorter time frame than that. But regardless, we're right at the bottom of this gap, and my expectation would be, as long as this 366 holds, that gap would be filled. And today being Friday, what you could do is watch the Qs very carefully. And we know that we've got a green pre-market setup. If you got that quick backfill to come back in to fill the morning opening gap, that would set up really nice for a Friday lotto, where you would get, calls slightly above, and then see if you don't get a Friday push to close this gap. That would be a really nice trade. You can see the gap is, for all intents and purposes, $4, maybe even a little bit more. So if you can get a cheap call, you can make some good money on that. I think that would be a nice trade to take. And then you can set your stop just below, or you could take the approach, it's a true lottery ticket, all or nothing. You get the best entry that you can, and then you make that commitment to one, if you get the gap fill, then regardless of the time, you may want to just take that off and that be your target, or you can wait till the very end. But I don't think it's going to go all the way up to 374. I think your objective for today would be just to get that gap fill on the Qs, take the money and run kind of thing. But if it wobbles down here, you may just want to hold it and say, you know what? I'm keeping it to the end as a true lottery ticket. And if you do that, just use lunch money. Don't go out there, trying to be a hero. Just get a, whatever you're comfortable with, whatever you're comfortable taking a zero on. That should be your number. All right, IWM. I've been bullish on small caps. They're starting to react. Well above the 50 down here, gapped higher. Now we're in the gap from here, and then get that gap fill, break above the prior high at 227, and then make your run up to the prior high at 229, and then above 229, that would open the door for a run to the top of the box, which I think is like, well, let me look. Should be able to see this. Where is it? Is it here? No, I'm not going to be able to find it right away. Thought I could. Got so many of these charts. I can figure it out. Yeah, it looks like 232 would be the top of the box on IWM. So above 229, 232 would be your target. And here you just got the resolved levels that we had a breakout, and we almost got a back test yesterday, a reach back to 225. So anyways, looks good for IWM. I think with the reopening, if we continue to have progress there, that IWM is going to be in great shape, especially if you see rates going back up again. That will be a tailwind for IWM. We talked about Facebook yesterday, possibly being a good breakout candidate. Well, it did. It gapped up in the morning, right up here to this 330 level, but then it just flattened out and more or less died at this resistance level. So for today and going forward, that's going to be, your pivot. Your first target is 335 at the bottom of the gap. You've got some intermediate resistance here at 339. And then you've got the gap fill up to 342.50. This is another one that possibly could set up really well for a lottery pick. Why? Because you're at a well-defined level, and if you can break above, I see a quick move up to 335, and then if it goes into the gap, then then it's on its way. So that's all going to be kind of like a market read kind of thing. See if Facebook starts to make a move, and if it does, then you can get long. But even let me show you this. Say you're a swing trader trading on the daily time frame. If there was a place to get long Facebook, it's right here. Why? You had the downtrend. You came right in and tagged the 200. So you could say to yourself, okay, I'm going to get long Facebook against the 200, right down here at 323. You could even say 325, but I mean, it's so close. Why not just say the 200? And you can see it emerging from this downtrend line. So, I mean, that's about as good a spot as you can get on Facebook with a nice objective long there. And then say, you know what, I got $5 of downside risk, and I've got all this potential upside just to, I mean, even to come back and fill a couple of these gaps up here at 360. I mean, that's a great run, right? Go from 330 to 360. So there's $30 of upside, and then you've got $5 of downside. So there's your 6-to-1 risk reward. So, I mean, if you're interested in Facebook, I think that's what this is the spot if you want to do a long swing trade out in time, out in duration, and say, you know what, Q4 is going to be bullish. It's going to hold the 200 and then go from there. Apple, we talked the other day that 144 was going to be an important level. Resistance, all these tags here, all these tags here, and all these tags back here. That's going to be a big level, and if it can get above 144, I think you got a nice long and an opportunity to fill these two overhead gaps up to 147, 147 and a half, and then after that, we should be well on our way with a series of higher lows and higher highs. So that would be a welcome development. Tesla, grinding higher. We came out of this consolidation, finally took out 805. I mean, it's inching, not super impulsive, but if you're long, you should be, making money depending on what your strike and expiration is. I think now, technically, you should be long against 810 because that was the level you can see here that it had a hard time getting above. So I think you can stay long against 810. And if you go over to the daily chart, you'll find that the upside target is 850. So that is your objective on Tesla, 850. Microsoft, nice move off the bottom. I mean, it happens fast, right? Here we are down at 281, and now we're at 302. So it's moved $20 just since October 4th, and now I think you just stay long against 302 with an objective of 305. And if you get that breakout there at 305, then you're in blue sky. And if you were, never in Microsoft, that would be your place to buy right there on the all-time high breakout. And then you've got a beautiful line to shoot against at 305 with your long. But active traders, you can use 302 as your pivot today. Amazon, kind of lagging the others. We're still down here at the 200. We did have a, A, B, C, we're in the process of the third leg, but we haven't really made a super ton of progress. But I would say the same thing that I would say about Facebook. We recaptured, or Amazon recaptured the 200. And So we went below, and then we recaptured the 200. So that's bullish. Whenever you recapture an exponential or any moving average from below a well-defined level, that's bullish. And if you were committed to Amazon long, then you can get long against the 200 and then see if you don't get this move back up towards 3,400 to fill this gap. And then there's even gaps above that as well. So you're at a good spot if you want to put on a swing against the 200. Google, gap up yesterday, filled its gap yesterday, so it's back on track. I think you can stay long against this prior high at 28.10, and then your next target is 28.40, then 28.60, and then right on back up again. So making some nice progress here on Google. We've got the higher low, we've got a higher high. Now if we move up here, then we'll have that sequence of higher highs and higher lows, and that's what you want to see if you're long and long the stock. You want to see that. Here's another nice example of that. A series of higher highs and higher lows as it's been in this channel. So now Netflix, you can be long against 632.50 and this uptrend line. We stayed within the channel, and you're looking for a breakout above 540 for the next leg higher. So that is looking productive. And then semis had a really nice day yesterday. I sent you a note yesterday about this. We talked about this double bottom structure with bullish divergence. If you're new, what is bullish divergence? Here you've got a low with PPO low, RSI low, and then you come back in price back to the same point, but at much higher RSI and PPO momentum levels. So that's your double bottom with divergence. Now we're up here at the top of the prior high, and so this structure triggers on a move above the prior high here at 260.50, and then you can get long against that level, and then the measured move target becomes the height of the structure, and so that's up here at 273. So I like semis. I like getting long against 260.50. If you got a pullback to the top of this gap and it held, that would be a place where you could make a buy, or if you came back to backfill this, you could try a long there as well. You kind of, even though I'm bullish on semis, especially if it breaks out here, you always got that question in your mind about a gap below that has yet to fill. It always leaves a little lingering doubt that price would want to come back and take care of that at a certain point. So let's leave it there. Got a lot of levels. I think the market is back on track. That's not just a feeling, that's evidence-based conclusion. Why? Because we've recaptured the 50 EMAs across the board, and the FATMAAN names, the market leading stocks, are looking better. I've pointed out the higher lows and higher highs on most of the charts, emerging, if not already well on their way. So that's bullish. And the thing we're going to have to watch going forward is interest rate trends. Remember, higher rates favor the cyclicals and the banks, reopening trades, and moves lower favors tech, bubble tech, right? So we're in that band between 1.5% and 1.6%. Just watch that, and that'll give you a clue as to where the headwinds and the tailwinds are going to be at in the different sectors. And as you know, I'm still really bullish on commodities, oil, copper. The solar space is perking up. The EV car space is perking up. So yeah, uranium is starting to rock again. So, and lithium as well. A lot of stuff out there. And when I see it, I'll pass it along to you. So have a good day of trading. Don't forget to check your positions so you don't have anything expiring. And please, if you decide to do a lottery trade on Friday, do it with money you're happy losing, because most lottery tickets end up torn in half on the floor. So keep that in mind. Hope you have a good day of trading. I will reach out midday, especially if I see something worth mentioning. I'll certainly let you know. This has been Chris Butts with Trader's Profit Compass. Talk to you next time.